Thursday, June 3rd is 5:30. We'll start with a roll call. Mr. Butita?
Here.
Ms. Crosby?
Here.
Mr. Arena?
Here.
Mr. Hoffman?
Present.
Ms. Red?
Present.
Mr. Salgado?
Present.
And I am also here. Mr. Thompson, have we anyone signed up for public comment this evening?
No, Mr. Chairman.
I shall omit that portion then. We'll move right on to D, a public hearing for the reapportionment of the county board districts pursuant to state law 55 ILCS 5/2-3001. So we are now in the public hearing portion of it. I presume we still have nobody to speak publicly.
No. No one has signed up to speak, Mr. Chairman.
What's the proper way to move forward then? Is it just, does anybody have anything to add to this, the public hearing?
You can ask members if they have anything to add, and if there's no members of the public that wish to speak, then you would close the public hearing.
Has anybody any discussion on this item?
I'll move to close the public portion of the meeting.
Ms. Crosby makes motion to close the public portion. May I have a second? Seconds. We'll do the roll call. Mr. Butita?
Yes.
Ms. Crosby?
Yes.
Mr. Arena?
Yes.
Mr. Hoffman?
Yes.
Ms. Red? Ms. Red? Mr. Salgado?
Yes.
And I'm also a yes. Ms. Red, are you available for vote? I can't remember what the present but not voting, I think is how it's called. But anyways, we that portion is approved. Item E is a resolution urging the General Assembly and Governor to assist counties required to meet deadlines to reapportion county board districts without updated federal census data. I know there has been some news that came out regarding this. Mr. Thompson, is this still a resolution you think we should pass in light of the recent events?
There is a Senate Bill 825, which is on the governor's desk for signature. Unless someone has a last minute update, I don't believe the governor has signed this yet. I think once he does, I think it would negate, I think, at least for now, the need for this resolution. But I think in last minute discussions with Chris Dornbush, there may be a need or a desire of the committee to still act on this resolution without knowing for certain if the governor has signed this Senate bill. But I'll let La Fakiria weigh in on this, but to some extent, I believe it by action of the Senate and the assumed action of the governor, I think it makes the need for this resolution less relevant than it did, say, prior to Senate Bill 825.
I agree, and I look forward from the state's attorney's office, but I don't think there's any harm in passing this in case something else runs afoul. Is there anybody from the state's attorney's office that would like to weigh in on this?
Yes, Chairman. I agree. It's no harm in passing the resolution, but thankfully we did get that good news that if the governor signs it, we get an extension until December 31st to pass our plan. So I'm fine with whatever the committee decides.
Well, I think it's in the best interest to pass this. So I'll motion the resolution. May I have a second? Second by Mr. Arena. Is there any other discussion on this? I don't know if you've all read the updates. I know Chairman Shirley had sent through. There's a bit of news on this. Does anybody have any conversation on this? Seeing none, we'll go ahead and take the vote for the resolution urging the General Assembly and Governor. Mr. Butita?
Yes.
Ms. Crosby?
Yes.
Mr. Arena?
Yes.
Mr. Hoffman?
Yes.
Ms. Red? Ms. Red? Mr. Salgado?
Yes.
And I am also a yes. One last chance for Ms. Red. It passes with Ms. Red present but not voting. Other than that, it's unanimous. Thank you very much. The next item is a resolution authorizing the execution of a renewal agreement with Swedish American Health System for on-site wellness center services. And I so move. May I have a second?
I'll second it.
Seconded by Mr. Salgado, Ms. Crosby. Thank you so very much. The item is now before us. Mr. Thompson, is there any, I've heard great things about the way this program is working thus far. Do you have any professional comment?
Well, I don't know if it's a professional comment, but I would agree with you, Mr. Chairman, that we've had really good employee interaction with our wellness center. And I'll let our HR spokesperson, Deb Crozier, speak to this issue, but I would urge your support on approving this. Deb?
Thank you, Mr. Thompson. So this is our renewal that will go into effect July 1st. If you recall, it was back in March 2019 that we brought this resolution to you initially to implement the Swedish American take over the administration of our on-site clinic. In addition to taking care of employees and their families that are covered under our group health insurance, we've also over the past few years added pre-employment physicals, drug screens, and workman's comp services to the wellness center. And this is a very, very valuable benefit for our employees. We do get a lot of comments, a lot of compliments on the benefit. Now this initially, when it came in, the renewal, it came in at 5.4%. And then with Ann John's help in purchasing, we have negotiated it down to 3.3%. And then as you can see too on the renewal, we have options for 3 one-year renewals, each coming in at 3% thereafter.
So it's 3.3% every year for the option of the following years as well.
The first year is 3.3, thereafter it's 3.
Thank you for that clarification. Mr. Salgado?
Yeah, I got a couple questions. The number one question I have is, I'm assuming this is budgeted, correct? Ricker, okay, that's the number one question. Number two question is, did we go out for bid or we decide just to extend the contract with them with negotiating the 3%, 3.3 and the 3% and 3%?
The initial bid that went out back in, I believe it was February 2019, we sent it to 6 vendors, 2 of which were local hospitals. And the contract at that time was for a 2-year contract with the option of 3 renewals. Okay. Just with the disruption of the clinic, we chose to stay where we are for now.
Now, understood. I just wanted to make sure that we're following the guidelines with
most definitely
your bids. Thank you.
Ms. Rena, did you have your hand up?
Thank you, Mr. Chairman.
You're back on mute again, Paul.
Okay, can you hear me now? Okay. The first contract was for 2 years with 3 option years.
That's correct.
So I'm looking at the resolution. It says that this began in February of 2019.
Actually, that's when we sent it out to bid. The contract began July 1st, 2019.
So I don't understand these timelines. So if the original contract was 2019, 2020, and then 3 option years, are these the option years? Is that what we're approving now?
We're wrapping up the end of the second year. From July 1st, 2019 to June 30th, 2021 will be the first 2 years. And then thereafter, we start with each 1-year contract for the next 3 years.
Okay, so these increases in rates weren't negotiated in the original contract. That's why we're doing this.
They were not.
Okay, and was there?
Excuse me, Ann Johns is on the line or on the Zoom with us too. Ann, do you recall how that was bid initially? I don't have the original bid in front of me.
Yeah, hi, this is Ann. We always bid, this was gonna be up to 5 years. And the first 2 years, we asked them to lock the rate in for 2 years. And we agreed in the contract that they would be allowed starting with year 3, 4, and 5 to have an increase because it's hard for anyone, much less in the medical industry, to lock in 5 years worth of rates. But we asked them in this case if they could lock in rates for the last 3 years of the 5-year contract because we're so satisfied with them. It just will make it simpler just to know what the rate is. Because the rate could have even go higher. Like I said, they wanted, what was it, Debbie, 5.4%?
That is correct.
So we had to negotiate them down and then we're holding them at the 3%. So we're very comfortable with, it sounds like a lot, 3%, but it really isn't when you consider it's medical. And with the amount of money we're saving with their services, it's a pretty good deal at the 3% for the year 4 and 5.
Thank you for that explanation.
Sure.
Mr. Butita.
Thank you, Mr. Chairman. So obviously, a good wellness program is an asset to any organization, also ours. I'm just curious, can you give us an idea of what the employee participation is in this program? Do we have a majority of county employees? Because this is available to all county employees, correct? Full-time
No.
and part-time?
Only employees that are covered under the group insurance, because when
Okay.
when we implemented the clinic, initially back in October 2013, the purpose was to offset our group healthcare expenses by running the services through the clinic.
Okay. And so any idea on what the participation level is of
Yeah.
those employees?
We have just under 1,000 employees covered under our group health plan. And the utilization of that is that there's about 200 that go through the wellness center a month,
Okay, very good.
Plus-
Thank you.
plus new hires for all the pre-employment services that are needed.
Right. Thank you.
Is there anyone else with questions on this subject? Seeing none, we'll move to the vote. Mr. Butita,
Yes.
Ms. Crosby,
Yes,
Mr. Arena,
Yes.
Mr. Hoffman,
Yes.
Ms. Red, Mr. Salgado.
Yes.
I am also a yes. So we'll go, Ms. Red. I don't know if she's still present even or not.
She's no longer present based on my participants list.
Okay, thank you very, very much for that, Ms. Vaughn. Passes unanimously of the members present. Moving on to the next item. It's a resolution approving an intergovernmental agreement between the County of Winnebago and Veterans Assistance Commission of Winnebago County, and I so move. May I have a second? Mr. Hoffman seconds. The item is before us. Mr. Thompson, have you somebody to speak to this?
Yes, I'll introduce the topic, and then we do have a representative of the Veterans Assistance Commission, Todd Burton, is attending the meeting. He can also speak to this. This is a renewal of an agreement, an existing agreement between Winnebago County and the Veterans Assistance Commission, a longstanding agreement. The current agreement expired approximately a year ago, and the former county administrator, interim administrator, had been working on this along with the former state's attorney's office, and it's in final format now. The new state's attorney's office, Lafayette, has assisted in the final review of the document. It's basically a clarification of the roles and responsibilities of both the Veterans Assistance Commission, along with the roles and responsibilities of Winnebago County. It's more of a clarification of the roles of both the VAC and Winnebago County. I've reviewed the IGA. LAFA has looked at it and reviewed it and signed off on it. Todd Burton, Mr. Burton, would you like to speak to the your role in this as well?
Absolutely, and thank you for giving me the opportunity. The first thing I want to do is thank the board members who were at our Memorial Day parade on Monday. It was great to have you present. If you heard me speak, I talked about how great the support veterans get here in Winnebago County and in the state of Illinois. So that is greatly appreciated. As we went to look at renewing this IGA, we had a couple goals in mind. Number one was to simplify it and get to plain language. There was a lot of legalese and mumbo jumbo and things tied directly restating state statutes, things that just didn't need to be in an IGA. We don't need a language in an IGA that says that a government agency agrees with another government agency to follow the state FOIA statute is an example of that. So we tried to get rid of a lot of that piece, and we tried to tie it to the state statutes, which set the VACs as small independent government agencies, as opposed to departments of the county, which is kind of how we've been looking at it here in Winnebago County through the process. And it's been not a easy. It was a tough process to come through all of this language, but we got a lot of support pulling it together. I think we've got a good document here, and I'd be glad to answer any questions you have about it. Some of the issues in it are a little complicated, so I'd be glad to speak to those.
Thank you, Mr. Burton. Has anybody any questions for Mr. Burton about this updating? And just the executive summary, and just to be clear, Mr. Thompson, this has nothing to do with funding or revenue. This is just clearing up language in the IGA.
That's correct, Mr. Chairman. It does not alter or change the levy that's associated with funding the VAC.
Mr. Arena?
Thank you, Mr. Chairman. So where it says in the IGA that the county is providing office space, and I think it says supplies, is that funded through the levy for the veterans, or is that through our general fund?
That is not funded through the levy. The statute specifically says that the county must provide office space, IT support, et cetera, outside the levy. And that is the way it is currently being conducted.
Exactly.
So there's no change there.
Okay, so there's in the case that there's a dispute on how much space or the level of supplies that we're providing, is it somehow addressed in here on how to resolve that?
With respect to those particular things, I don't know that it's specifically addressed in here, but that would come down to what space the county provides us, what IT support the county provides us. That's not something we can just go out and buy computers and things and then bill the county for it or move into new office space. Any growth in office space requirements, for example, would be something that we would have to come back and talk to Mr. Thompson about and work through that way. As far as the overall administrative budget for this, and this is where it gets a little confusing in the statutory language. There's two pieces to the VAC budget. There is VAC, the administration, the salaries, the expenses that go to day-to-day running the office and serving the veterans. And then there is the veterans assistance portion of that. And those are treated as two separate line items in the county budget. And within the budget book, they are broken down, and the county board does vote on how much administrative costs we're allowed to spend.
Okay, on the veterans assistance, that's funded through the levy, right?
Both are funded through the levy, yes.
And you guys decide how to disperse that money, right?
We set the formula, we meet with the veterans. We set the standard, which the standard we're currently setting for a veteran is our goal is to get them to 135% of the federal poverty line, which means that the townships send veterans to us as opposed to us pushing the veterans over to the townships for assistance.
And then just the term of this is for how long, this IGA?
This is for 4 years.
Okay, and so, so back to just, not that I'm looking for problems, but, in terms of dispute resolution, if they say, hey, we need new computers, and we say we can't afford computers, what happens then? I mean, it's, is this document just silent on that? We just have to
No.
work it out, or?
It's not silent. It does say that if there is a disagreement between the county and the VAC for the total amount of expenditures the VAC submits to the county, the VAC and the county mutually agree to work together in good faith to resolve such disagreements in order to fully carry out the purpose and intent of the agreement. So it contemplates that the VAC and the county, if there are differences, that they work in good faith to resolve them.
Okay, that sounds adequate. Thank you very much.
Did you have something to add, Ms. Vaughn? I did see your hand up.
No, but Pat took care of it. Thanks.
Salgado?
Thank you, Mr. Chairman. Just a question. I don't know. I looked through the document. I don't know if there's anything regarding reporting out any expenditure reports on a yearly basis from the Veterans Commission. To that note, also, I don't know if I saw anything about potentially in the Treasurer's Office, potentially auditing them, doing like an audit report that they typically do. Are those things that were in the document? Because I don't think I came across any of the reporting, or in case the treasurer can audit, the commission, just their books, on that aspect of it, just like they do departments across our county. So just wanted, those are the
we would welcome that. We would welcome support from the county in auditing our books. We want to be perfectly open on it. We did ask the county auditor to conduct an audit 2 years ago. He declined to do that. He believes that we are an independent government agency, that his charter is to audit the county. We've agreed to disagree with that, and we have sought out independent auditors on the private sector to conduct an audit to provide that level of information to you and to the county taxpayers. We've not had good luck in getting somebody to come audit us. We're just really small, and the folks that have expertise in auditing governments, agencies, we're below their radar screen. So we haven't had any luck getting an auditor. COVID threw a loop into it as well, and that just set everything back by a year.
Yeah, and my only thing that I come across, it's not so much from a auditing standpoint, like let's do an audit like we typically do, but more importantly, from a control standpoint, making sure that we have proper controls in place when it comes to, X, Y, and Z, just like the auditor does, his reporting across the board and giving recommendations. So in case, say, for example, 2 years ago, we kind of had a similar situation where they presented the budget. There were some issues with, I think it was a treasurer, he wasn't up to speed. And so, that kind of brought up an alarm. And so a concern there, not that anything was going improper, but I think it's a good thing to have just in case, since it is taxpayers' dollars that are coming across. And no disrespect, I think it's an important program, what you guys do out there. Especially we spoke in the passion that your members have out there. It's just one of those things that, was kind of concerning at that time. So that's the only aspect why I bring it up. And particularly having that discretion of the reporting, whether it's annually, semi-annually, whatever the case may be, to the county board. So everybody's kind of satisfied with that.
On that note, with respect to the assistance side of things, two important factors. Number one, no checks go directly to a veteran. The checks go to landlords and the utility companies, and those checks are issued by the county, not by the VAC itself. We submit a voucher over to the county. The county reviews those vouchers. I believe they come to the county board for approval with the overall voucher package every year, or every month, though that's a very long list of checks that are being written by the county. So, but that side of things is absolutely following that process. And we would welcome more oversight, transparency. I do government finance for a living. I completely understand the importance of it and fully support it, and look forward to reporting to the county board regularly what we're doing.
I'll get you on one moment, Ms. Crosby. Ms. Vaughn, could we make an amendment to this document just saying that my intent is to compel the auditor to periodically perform an audit? And I'm not so worried about if it's annually, semi-annually, or just if we just use the word periodically, would that compel him? I understand his argument about you're not really fall under his umbrella, but would a simple piece of language like that help make it easier for Mr. Burton to be audited by us?
Thank you, Chairman. Yes, we could add something in section 4B. So we could add some language at the end of section 4B. Because now it currently has that the VAC may budget and contract for an independent audit at such times as it deems necessary. So we could add that the county's auditor may request an audit periodically or something like that.
May conduct.
Shall request, or shall conduct. May leaves it kind of squishy. So I'd rather see shall.
Okay.
I understand the shall, Ms. Crosby. The only reason I suggested, I wasn't sure that we could actually compel him to do it.
Right.
Well, he's our employee, so I'm gonna say we can.
Independent electeds, though, like the sheriff doesn't have to do what we say, and he's an independent. I wasn't sure that we could force him to do it, is my point. But
Well,
no, I'm sorry, do you have any more, Ms. Crosby?
Well, my point is, I think we need to compel the auditor to assist in the auditing of this because it is taxpayers' money. And I don't understand, truly, I don't understand why he wouldn't step in. At very least, it's an effort of goodwill. And to me, that's very important. That's it.
Thank you, ma'am. Mr. Arena.
I agree with Ms. Crosby that he should do it, but I think we need a determination from the state's attorney's office before we amend it to try to compel him, because my understanding is, as yours is, Mr. McDonald, that we can't compel a independently elected official to do anything at all. So let's just get clarification on that.
And I agree with you. I think I'm at the point, I think this is an important point. I think we do need to have an audit process. I think it's appropriate for our auditor to do this. Honestly, I'm at the point of making a motion to lay this over to the next meeting so that way we can have time to research this properly and make sure the auditing language is included in that. Would anybody be opposed to that motion? I'll make it. I'm going to make a motion to lay this item over until the next operations meeting for the purpose of getting it properly amended to include auditing language. May I have a second on that motion? Seconded by Mr. Hoffman, Mr. Arena. We'll go through Mr. Butita to a layout.
Yes.
Ms. Crosby,
Yes,
Mr. Arena,
Yes,
Mr. Salgado,
Yes.
Mr. Hoffman.
Yes.
Am also a yes. So the item lays over to the next scheduled operations meeting. And I think you understand where we're trying to get Mr. Thompson and Ms. Fawn. Thank you.
And the VAC would like to be involved in that editing process, so we got to sign off on it as well, but we're in concurrence with the intent. Thank you.
Thank you, Mr. Burton. The next item is County Administrator Appointment of Human Resources Director. And just a quick note on here, I don't see resolution or anything for action on this ordinance nor resolution. So is it my interpretation that this is just for discussion tonight and we can take no action?
Right. Thank you, Mr. Chairman. You are correct. This is a county administrator appointment, so it does not require a resolution. I will bring forward this recommendation to the board. It does require confirmation by the board. Any county administrator appointments require confirmation by the board, but it does not require a resolution or ordinance to come in front of the board. What I will be recommending is the appointment of Deb Crozier as Human Resources Director. Deb was appointed interim or acting HR Director in July of 2019 by the former county administrator, and she has been fulfilling that role for coming on 2 years. It'll be 2 years in July. Debbie has 10 years experience working for Winnebago County. She has guaranteed that she will work to achieve her SHRM certification, which is the Society of Human Resources Managers. It's a certification that human resources directors typically have. And she has agreed to work towards achievement and achieving that certification within 18 months of her appointment. This is an informational item for the committee. I wanted to brief the committee on this, that this appointment is coming forward to the county board. It does not require a resolution from your committee, but you are the home committee for human resources. And so out of respect for the committee, to brief you on this before it comes next week in front of the county board.
Thank you, Mr. Thompson. And I spoke to a couple department leaders about the appointment, and so far the people that I speak to thinks Ms. Crozier is doing a great job, and I don't know that many people have any problem with it. Is there any discussion, any other thoughts or ideas? Mr. Hoffman.
Thanks, Chairman. I hope, can you understand me? I'm down in my basement again. So, okay. My only concern is that from what I understand, I've been with the county for years. So the last person that had the position didn't get a certificate until the very end. I just want to make sure that we are going to work towards having a certificate. I hear them saying it. I just want to make sure that we understand that is what I think is necessary to have, because we didn't do it the last time. We didn't force the person the last time till the very end.
Ms. Crozier, comment on that at all?
Yes, I've had discussions with Deb Crozier, and she has, we've had some very serious discussions regarding it, and she has assured me that she will achieve that certification within 18 months of her appointment.
Okay. I also want to add that, Deb, I don't think that, I'm not saying that because I think you're not doing a fine job. I do think you're doing a fine job. So I just want to be clear on that.
I understand. Thank you.
Are there any other comments or statements or questions on this matter? Seeing none, we'll move on to other matters. Has anybody for other matters this evening?
No other items, Mr. Chairman, from staff.
If no one has anything else for other matters, how about a motion to adjourn? Mr. Hoffman, seconded by Mr. Salgado, Mr. Arena. All those in favor signify by saying aye.
Aye.
Is there anyone opposed? Thank you very much for your time this evening.
Good evening.
right. Let me pull up my agenda. All right, we'll get started. I'd like to call to order the Finance Committee. It is 6:05 PM, June 3rd. Take roll call. Myself present. Mr. Schultz.
Here.
Mr. Butita.
Here.
Ms. Arena.
Here.
Mr. Hoffman.
Present.
Ms. Crosby.
Here,
Mr. McDonald.
Here.
All right, we have full quorum. Mr. Thompson, anyone signed up for public comment?
No, Mr. Chairman.
All right, see none, we'll omit the public comment and move on to item D, which is a Chief Financial Officer report, and I'll hand it over to Mr. Rickard. Thank you.
Good evening. I'd like to, we have a very busy agenda, so I'll try to move it through it very quickly and to point. The first item of discussion is the interest proration by fund. As you well know, that the county treasurer has investments entrusted with her. Those investments earn interest. And the process in Winnebago County is to take all the pooled interest and just pool it for the general fund. I had a request earlier in May from the ETSB board. They have a balance of approximately 5.9 million in their fund, and they have a request to prorate interest based on their interest earnings off of the pooled fund. Currently, to give you an idea what the balance is in the pooled assets, we did an analysis, and based on last year's activity, we aggregated about $18,000 in pooled interest, which means somewhere between 5,000 and 6,000 would probably go to the ETSB board if we did that proration. For reference purposes, in my previous employment, we prorated interest on a monthly basis, but we had a significantly larger pool of funds with which to prorate. And the question is, actually, it's two questions. One, do you want to continue with the historical practice in Winnebago of not prorating interest, which I don't recommend. I think we should prorate interest. And two, how frequently you would want to do so, realizing that it's a significant amount of work to prorate interest. My recommendation, if you're to prorate, would probably do it on a quarterly basis and go based on the beginning and ending balance per fund and do that proration. And that's the current issue with the ETSB board. And I'm sure the external auditors would agree with me that they would recommend we discontinue our current practice of not prorating interest by fund and begin a process of prorating that interest.
Are there any questions for Mr. Rickard on the new process of the proration? From my standpoint, yeah, go ahead, Mr. Arena.
So does this require board action or is it just?
I'm conferring with the finance committee to look for your direction on this issue. My recommendation is to prorate the interest on a quarterly basis based on fund balance.
So it's just, what we say here today is giving you direction and that's how we move forward, or will
Correct.
resolution have to come back to formalize it?
It would not be a formal policy. It would be a best practices, a generally accepted accounting principle that we prorate interest, which we should be doing this.
Okay, I trust your judgment and would follow your recommendation. Thank you.
Go ahead, Mr. Butita.
Thank you, Mr. Chairman. I also would defer to Mr. Rickard's expertise and would follow his advice.
Okay, thank you. Based on the board's input, I will begin prorating interest on a quarterly basis. Mr. McDonald, I'm sorry, I didn't see your hand.
No, so you and I have spoke about this once before. Is this fall in line with other counties that you've worked in? Are we moving to a more common system or a less common system?
I'm frankly surprised that we haven't been prorating interest. This is the normal practice in all the other counties to prorate the interest earned. And it's actually built into the accounting system. One of the features we had with the version of Munis that we have in Kane County is built in an automatic feature with which to develop to facilitate that proration package. So that's something we would have to look at until we figure out how to implement that through the Munis system. In Winnebago County, we would do a manual proration, which we can develop a spreadsheet with which to do that.
Thank you, Mr. Rickard. I do have a question, not so much of a question, but if you could explain what the current process is and what the new process is. I understand completely, just for the record, so everybody understands.
Winnebago has a variety of funds. For the larger funds, they actually have their own CDs and deposits with which they accrue interest. For pooled funds, in other words, we have one pooled fund for the general fund through the checking account to where they hold interest earnings. And then the process in Winnebago is they allocate that to the general fund. The correct accounting procedure would be to allocate it by fund. So it would mean a little bit less interest for the general fund, but it would more accurately reflect the activity of each of the funds with their fund balance. It would keep us in compliance with the generally accepted accounting principles. And we're not talking a huge amount of money. We're talking a proration of $18,000 on an annual basis by fund. The one challenge we're going to have is some of the funds have a negative balance, which means they actually owe more than they've actually borrowed technically from the general fund in order to meet their fund balance. We would have to, what was done in my prior employer's position is we would actually allocate an interest penalty for those that had a negative balance. So that's a further discussion we would probably want to have. That would further complicate it. I wouldn't necessarily recommend a penalty for negative balance. The goal would be to a longer term picture is we wouldn't allow negative balances for funds. I'm not sure why we're opening up a can of worms here. I'm not sure why it's been allowed to have funds to consistently from year to year allowed to carry negative balance. That's just not how it's done in other counties. If you don't have the funds in your fund, you're not allowed to spend money. That should be the policy. And I believe we've modified the financial policies to direct exactly that. That if you don't have a balance in your fund, you don't get to spend money.
All right, thank you for that clarification. I understand what the process we're trying to do here, and I think it's a good step in that direction. It clears up a lot of potential questions. Any other questions regarding this, Mr. Richter? All right, continue on, Mr.
Okay, thank you. Well, the next topic of discussion was a suggestion by Mr. Schultz that we represent the River Bluff Nursing Home financial statements and include an adjustment to show what it would look like if we made the appropriate adjustments to the write-off for accounts receivable, and also show the economic impact on the budget for the amount of liability and tort claims we have for the River Bluff Nursing Home. So in your packet, you have a pro forma financial statement that does exactly that. You'll notice with that pro forma that we would have, if we wrote off what appropriately should be written off out of the River Bluff Nursing Home, a $3.8 million write-off in the first year for the River Bluff Nursing Home. And let me just jump over to that sheet. So you're going to look, if you look at your pro forma financial statement that's in your packet, you'll see a huge hit in fiscal year 21 where your operating income or loss would be a $6 million loss. And then another appropriate adjustment for tort and in your other adjustments for property tax would give you a net loss in 2021 of $5.4 million if we wrote that off and if we were abrogating the tort losses for the River Bluff Nursing Home. Now, to be a little bit more sympathetic to the position of the River Bluff Nursing Home, we are also in the middle of a pandemic, which has significantly adversely impacted their revenue stream. If you carry this methodology forward, you'll notice by fiscal year 2023, based on the current adjustments and recommendations made to the nursing home, they should come back into profitability of about $1 million a year, and they will probably optimistically hover at about $1 million a year if everything goes well. There are no significant tort liability issues beyond the average we've had historically. And accounts receivable are maintained and kept up to date. So that's what I consider a more of a best case scenario, is that the nursing home, if well managed, without any issues, without any pandemic or significant court issues, should operate at about $1 million a year to the black. Otherwise, you have obviously significant liability challenges whenever you operate a nursing home, and that's just the reality of the situation you have with the nursing home. But I agree with Mr. Schultz. Providing this additional information with this pro forma gives you a much better focus and picture of what's going on with the nursing home, what the risks are, what the true economic condition is, and I think it gives a much better picture for you to look at what's going on.
Ricker, can I interrupt?
Yes, sir.
You said best case scenario. I guess my question to that would be, is that a realistic case scenario?
I think so. This involves getting the nursing home back up to 200 beds, targeting the right people to come into the nursing home, adopting the software packages we want to include in order to accurately track the accounts receivable, the update to the financial policies that we've instituted with the nursing home. So I think this is a very realistic issue, but I do want you to be cognizant that the net liability issues for tort is an average. So you're going to have years where you may have significantly less, you may have significantly more, but on a long-term average, it should probably net about $1 million a year once they get up to 200 beds in the nursing home.
Mr. Chairman.
Yes, go ahead, Mr. Schultz, and then Vito.
Thank you, Mr. Chairman. First of all, Mr. Ricker, thank you so much for adding the lines that you did. It's definitely gives a more accurate picture, and I understand that, it's projection at this point, but you're doing the best you can. The one question I have, just from an accounting standpoint, I'm a little confused by the second line from the top, the operating revenues, the accounts receivable net. What I'm confused about with that is, the write-off of accounts receivable makes sense to me, but the revenue lines in the subsequent years does not, because if that's the collection of existing accounts receivable, then, that would not be, from an accounting standpoint, it would not show up as a positive line next to accounts receivable. It just would be part of your revenue, because accounts receivable reflects income that's already been recorded in that top line for charges for services. So accounts receivable is a balance sheet. The collection on that is a cash flow issue, but it's not a revenue issue. So help me understand the FY22 and following what you're getting at there.
Essentially, what we're trying to break out is the allowance for doubtful accounts. And by doing that, we have an aggregate amount and a net amount, and then you aggregate. I agree that would normally be shown as an amount for services charged. But the reason we're breaking out, I believe, is we're simply trying to give some clarity to the issue, to show you what the impact will be on the aggregate budget. And that's why it's showing up as a second line item.
Well, I think it'd be wise for you to follow up with the finance department on this, but I think it actually is a double counting of revenue. Because again, that everything that's in the accounts receivable has already been recorded as revenue. And so if you're showing it a second time, when it really is just the collection of the outstanding receivable, if you're showing it a second time as revenue, then you're double counting the revenue.
I'm pretty sure we're not double counting it. What we're doing is we're simply breaking it out to show you the net impact of the allowance for doubtful accounts. But I'd be more than happy to research that issue for you and get back to you and let you know the situation with that. But we're not double counting, but I'll look into that for you.
Yeah, we can have an offline conversation too, if that'd be helpful. Thank you.
Mr. Butita?
Yes, thank you. A question about River Bluff. I know at the beginning of this year, we increased the pay for our CNs in an effort to reduce contract labor, which was pretty expensive. Have we been successful in that effort by reducing our contract labor and hiring more CNs into the county employment?
Unfortunately, no, that's something we've been regularly tracking. The labor market right now is conducive to significantly more in earnings than what we're even offering, even at $2 more an hour. And that's the current situation with the market. There's an extreme demand for that service in the private sector, and it's very difficult for the nursing home to compete, even at that higher wage rate. So not good, but the effort logistically made sense. Unfortunately, especially with the amount of resources the federal government's dumping into the economy right now, there's a lot of other demand out there for these services at a much higher wage rate.
Okay, thank you.
Any more from Mr. Arena?
Thank you, Mr. Chairman. Mr. Rickert, can you explain the meaning of the last line on the document, total net position end of period? What's the meaning of those numbers?
That's what the balance would be in the fund balance, where we would be at the fund balance. It actually has a negative fund balance. We had a discussion earlier where we were talking about negative fund balances and why that's an issue. And that's the same issue here with the nursing home.
Okay, so in 21, the fund balance is short 3.4 million.
It would be if we do that write-off.
Pardon me?
I said it would, if we did that write-off that we discussed, that would be the fund balance. It'd be a negative fund balance. Remember, we mentioned that if we wrote off $3.8 million, that's how it would flow through the financials for 2021, and then we would have a negative $3.4 million fund balance.
Right. So when you're talking about fund balance, this is our actual cash on hand, right? If we
That's what it would be, but these are pro forma financial statements. So if we were to do a write-off completely in the first year, this is what it would look like.
Okay, so projecting forward to the 25, we're still at a loss in our fund balance of $600,000 at that point in time, right?
If we did that write-off, correct.
Right.
There would be an actual negative fund balance if we did that accounts receivable write-off.
Right. So this write-off exercise is us making the assumption that we're never going to get that money, right?
Well, technically, no. What we would do is we would hire a firm to go out there and attempt to recover some of these assets. Just because you do a write-off doesn't mean it's completely lost. There's always an opportunity to hire a firm and do a revenue recapture of written-off items. And that's something we've looked at. With the River Bluff, the circuit clerk has actually adopted a fairly successful effort with which to reclaim written off items and reclaim assets that, let me correct that, not written off items, but to use a collection firm to assist with collections with our accounts receivable. It's been fairly successful.
Okay.
So that's just one of the things we're considering.
I thought we already did hire a collection firm. Right when I came on the board, we hired a collection firm for accounts receivables at River Bluff.
You are correct, Mr. Arena. Unfortunately, to date, they have not been engaged to perform that service, and which is kind of a mystery, but that's kind of where we're at right now.
So that never happened?
That never happened.
Okay.
I believe the way it was explained to me that because of a change in staff and because of additional clarity they needed in the financials, and something that we've addressed just fairly recently with providing the accounts receivable collection procedure for the River Bluff, they had no guidance with which to do that, but now they do. So that's something we definitely want to look at. And I would strongly recommend we actively pursue collection of these accounts receivable.
Yeah, I would agree. But so just projecting out to a 6th year, can we assume then that if we were not to be able to collect any of this money in that 6th year, that fund balance would be back to, zero? Like we wouldn't be in a negative?
I believe by fiscal year 2026, if we projected it out that far, it would be a net positive based on projections of about 400,000. So there are a lot of complications with River Bluff. Financially, this is just one complication. There are even before COVID hit, there were significant systemic problems with the operations of the nursing home, and we're systematically going through them one by one and addressing them. Right now, our focus is on the financial end of it, looking at the accounts receivable, identifying the proper policies, and then coming to the finance committee for guidance on further direction.
All right. Thank you for that explanation.
Thank you.
Mr. Salgado, this
Yes.
is Angie Goro.
Go ahead, Ms. Goro.
Paul, you're right about we had hired SAC, I think it was SAK. And one of the things they were supposed to do was go back and start collections. We paid them over $200,000 for coming in and trying to, as consultants at that time, and you can go back, if you don't have the records on it, I have them. And they were supposed to be doing that, and after 3 months, found out they weren't doing anything, and they were released. And we were out over $200,000. There's been money spent foolishly through our past administrator because they were paying for things that we didn't get service on. That's part of the problem. My question is, if this debt is prorated down every year, what would it look like in 05? I mean, we must have accounts that are 10 years or more old. How are we ever going to collect on them? Why isn't that being prorated down, that debt? Because you can't combine today's debt for the last 2 years or 3 years with those that have been there for a long period of time. My complaint was always the long period of time. Why are we keeping them on our records? Why are we letting them take us downhill instead of trying to level it off? Do you have an answer for that?
You make a very good point there in that there hasn't been an active effort to weight the aging of the accounts receivable. And that's something that definitely should have been done all along. And that's something we're really in the process of looking at right now, that identify these features. Well, like I said earlier, one of the challenges was they didn't even have an accounts receivable policy or an admittance policy that required financial information from people that were admitted to the facility. We have both of those in place right now, and we're untangling this web of financial misdirection in trying to provide some clarity and direction to the finance committee so you guys can make accurate judgments on what to do. But this is definitely the direction we're taking it. And this is the value of the pro forma financial statements. So you at least have a picture of where we are right now and where we have to go. At least we have a roadmap now on how to get there. But those are two things that really have to be done. One, to engage an accounts receivable specialist to come in and get our older accounts, and then actively engage staff to go out there and obtain the accounts receivable information they need for billing and collection. Part of the challenge right now is they have a multitude of financial systems with which they're operating under. We're looking to correct that. And there is an allotment in the ARP plan to provide funding specifically for that. The other challenge is they've had a lot of financial challenges as far as staffing in the nursing home, and not always the best decision-making processes in place. And working with Administrator Thompson, me, and a host of other people, we're actively working with Pat McDermott to try to identify these issues, provide direction to her so we can correct these issues.
Thank you. Stay forward, though. We should really work with Attorney Vaughn to get a policy going. Every day we waste not having policies, another day we're putting ourselves in a hole. So that's something that actually finance committee would get on, or operations, whoever needs to do that policy and get that started. So from this day forward, we would have a different picture too.
Well, my goal is to update the finance committee on a regular basis to explain our progress, where we are. We've reached the phase where I think we've got an accurate financial picture of what's going on there. Now we have to implement the changes in order to progress the situation forward with the nursing home.
Well, let's get going on a policy. I don't know which one of us is going to do it, but we really, if it's finance, if it's operations, that policy needs to start today. We've already wasted how many years not having a policy? So let's, for this point forward, my suggestion is that we do a policy. Thank you.
Thank you, Ms. Goro. Just to that, I mean, this is why the whole discussion has been happening. One of the concerns was the aging of the accounts receivable. We talked about selling it to a third party at 50 cents, 75 cents, whatever they're willing to take, so we can get that money, and it's their idea to, go after them, sell the accounts receivables to a third party. There's been talks about, I'm sure we're going to devise with our auditors that are out there, where there's some questions on the language. Obviously, there has to be some sort of, accounting practice that has to be done. So hopefully our auditors are going to be as part of the discussion, since that's what they're doing, and they're paid for, for auditing us, making sure that we're following GAAP principles on that. So yeah, more to come on that. I do appreciate, Mr. Rickert, all the hard work you're doing on trying to project this. I know that we have a county next door that's in the same situation, looking to see what they can do with their nursing homes. So this is just an example where we need to obviously keep pushing with and provide this to Pat McDermott out there and the new staff that's out there, and work through these issues that we can and report back to this finance committee. Ultimately, it's our decision, and trying to put accountability out there and see what we can do. Obviously, that's our intent, that's our goal. It's a service that's needed out there. Talk to many constituents, many citizens out there that like the service that they provide out there. So, but there is accountability that goes on with it. So it's nothing new. We took this upon us about a year ago. COVID hit. We're still fighting through. More to come on this. I do appreciate it. And if anybody has any questions regarding the pro forma that Mr. Rickert, produced, please reach out to him. We can have discussions offline. In particular, areas, suggestions, ideas, anything that we can do to obviously mitigate our. One of the biggest things that I was going to ask that you answered, Mr. Rickert, was the ARP money. And we use some of that money to write off that would count for that. So that's something that, it'd be good to look into, probably absorb some of that loss. That would be the first year. So, but yeah, are there any other questions regarding River Bluff?
Just one more comment, Mr. Chairman. Yeah, in terms of Mr. Arena's comment, as far as the fund balance, there's dramatic improvement in that, obviously, in this pro forma. But I do want to point out that in FY25, while there's a negative $600,000 fund balance, whatever accounts receivable balance we would have at that time would add to the negative cash position. Right now, the last time we looked at the negative cash, it was over $10 million. Even though the fund balance is a negative, it's actually a positive 1.9 million according to this. And the reason is because that accounts receivable balance is not cash in hand. And so I just wanted to point out, okay, 5 years from now, we have a negative 600,000, but if our accounts receivable is still $3 million, let's say, then our negative cash is going to be $3.6 million. And obviously that negative cash is a drag on the general fund because that's what it's being borrowed against. And eventually the target is not just to have a positive fund balance, that the target is going to be to wipe out that negative cash and have that burden on the general fund removed. Thank you.
Any other questions? Go ahead, Mr. Rickert.
Yeah, and I thank you again, Mr. Schultz, for pointing that issue out. I do want to point out that we have a $4 million ask with our ARP funds for revenue loss related to county operations, with a significant portion of that focused specifically on the River Bluff Nursing Home. So there is an opportunity to use some of the ARP funding that we have to offset revenue situations. And I think the nursing home gives us an excellent example of where we can apply some of that revenue.
All right. Thank you, Mr. Rickert. Mr. Arena?
So just to follow up on Mr. Schultz's point, does this pro forma assume that we're collecting all the money owed to us in 22, 23, 24, and 25?
It's assuming that we are billing out what we have. We have a normal, what I consider, where we're taking historical activity, correcting for some of the deficiencies in the past, and have a, what I call a normal, based on whatever the projections give us, of an accounts write-off, because you're never going to collect 100% of your accounts receivable. You have to, that's why you have an accounts receivable allowance for doubtful accounts, and then you offset that with actual activity.
Okay, so this is making the assumption that we won't collect all the money.
Correct.
All right, thank you.
All right, go ahead, Mr. Rickard.
Okay, thank you. We're on to item 3, the county's general fund activity report. This is something that Chairman Salgado requested that I produce to better assist and aid the Finance Committee with understanding the county's financial picture. I want to point out that the report, you have to kind of take it somewhat with a grain of salt, because there's a significant delay with what we get in accounts receivable from the state of Illinois. So even though if you look at this report, you see a negative $7 million balance. If you go all the way down to the bottom of page 2 and look at actual, you'll see almost an $8 million negative balance. You have to offset that with the issue that we have significant amounts of revenue in the state of Illinois that still has to be accounted for. So not nearly as dire as it looks. I did, on advice, we did do a breakout to show you on page 1 at the bottom that gives you a breakout of some of the revenue streams associated with it. If you look, there's 2 stars there that'll give you a breakout of some of the major charges for services. And also, I know a topic of discussion always is where are we with our cannabis tax? We had budgeted this year earlier $200,000 with our local cannabis sales tax. We're currently at 387% collected. We have $774,000 collected with the cannabis sales tax. We'll probably end up well over $1 million for the year. So that's an $800,000 to the plus with the cannabis sales tax that we'll be able to apply toward general fund issues going forward. So we're currently in the middle of the budget process. We're also balancing that activity with our ARP capital expenditure request, which you're going to see very shortly. We are currently working with administration and with Chairman Chiarelli to identify key aspects of the ARP, the American Recovery Act plan, and we're going to be coming to the Finance Committee shortly with both a presentation and a budget, very similar to our capital plan that we did earlier this year. So there's a lot on the agenda. Within the next couple of months, I'll be very busy. Hopefully we can juggle both the budget and this capital plan. Currently, as it stands right now, the capital plan for ARP is about $19 million, and we have ARP broken up into 4 segments. But I'll give you much more detail later on at the next meeting, breaking that out, showing you what we want to impact. One of the things we want to address, there are several key issues related to River Bluff with ARP that we're addressing. One, we're going to give them the necessary tools they need to accurately attract their accounts receivable information. On a second note, and really in a county's bigger picture, is we want to reduce our liability profile. So there's a lot of maintenance issues with River Bluff and with the county that we're addressing, to where we're hoping to reduce our liability profile. And again, by providing capital in necessary areas, we're hoping to reduce our maintenance costs to provide more money for operations for the county.
All right, do you have any other comments through our position, or are you good with that information you provided us, Mr. Rickard?
I'd be more than happy to answer any questions if anybody has any questions related to the final report.
Just have one question.
Mr. Schultz.
Thank you, Mr. Chairman. Just in terms of the big picture, and I know you have the prior year information through April, which we've talked about potentially at some point getting in front of this committee. But I'm just curious, do you think, based on what you're seeing thus far, Mr. Rickard, that we will finish equal to, better than, or worse than our bottom line expectations for the general fund and the public safety sales tax fund?
We have a number of issues. One, even though there's a timing delay with revenue, I'm somewhat concerned. I know the economy is heating up. I'm hoping that helps with sales tax, particularly the public safety sales tax. There are some revenue challenges with public safety sales tax. It's not quite where we would like it to be. The one shining star right now of public safety sales tax that I'm very pleased to see is the revenue being generated from the federal prisoners for the sheriff's office. It should come significantly over the budgeted amount. Unfortunately, most, if not all of that, will be offset by additional expenditures related to the operations of the sheriff's office. So right now it's a net wash, but we're monitoring that. We're monitoring that on a monthly basis, sitting down, working with the sheriff and his staff, identify cost expenditures, looking at revenues, and we will, when appropriate, come to the finance committee and provide you further guidance on that. But right now it's at a net wash. But what we're going to do probably down the road is look at transferring some of that net gain to offset some of those net expenses related to the public safety sales tax.
Follow up, Mr. Schultz?
Yeah, thank you, Mr. Chairman. I guess I understand that it's hard to project, and I'm very sympathetic to that. I think I heard you say that in the moment we're behind budget as far as your estimate or guesstimate as to where we would land based on current trends, everything you know today.
I think the way I would phrase that is I'm concerned. It's something we're watching very closely. I do know the economy is heating up. We're still coming out of the COVID era. So sales tax is something of particular concern for me. The property tax revenue is coming in as targeted, as it should be, and that's a significant portion of our general fund budget. But sales tax is an area of concern. It's something we're going to watch. And yeah, I'll be honest, it's something we're monitoring. We're hoping it comes into where it should, but there are timing issues with where the money is coming in from the state of Illinois, and that's always a concern. The other thing we want to watch are expenditures. Right now, everything's looking fairly good on the expenditure side, but there are some challenges with the sheriff's office. But fortunately, the revenue generated by the sheriff's office right now will offset the additional expenditures related to the operations of that office.
Go ahead, Mr. Arena.
Thank you, Mr. Chairman. So, Mr. Rickert, you're saying that we got more revenue than expected from the inmate program, but the sheriff has spent more than what was budgeted, and that's how it offsets. Did I understand that correctly?
To be more specifically, he's trending higher than his budgeted projections. He's not overspent his budget, but the trend is over the percentages we would like to see at this point in time.
Right. So if he kept on that path, then at the end of the fiscal year, he would have overspent the budget, but the additional revenue is going to cover that overage. Is that what you're?
Right now, that's the position we're at, is the additional revenues offsetting that expense.
And is the sheriff expecting that at the end of the fiscal year, he will have overspent his budget?
I don't want to speak on behalf of the sheriff. What I can say is that the current trend is above where it should be for this time of year.
Okay, thank you.
Go ahead, Mr. Buttigieg.
Thank you, Mr. Chairman. So my question is relative to the state income tax. I know the state was proposing to cut the amount that they return to the counties by 10%. I haven't been able to determine if that actually happened in this last budget process or cycle in the state. Are you aware if that did go through? And if so, is that factored into your revenue calculation?
It is not. If they did, it would not be retroactive, so it wouldn't impact it this year. It would be going forward. But whether they do or they don't, there are a whole host of revenue items that I think the board really needs to be cognizant of with what's going on with the state of Illinois. There's definitely an effort to shift revenue responsibilities down to local government. That's always been a trend with Springfield to want to do that. I think we need to be vigilant to watch this, to be in communication with our state reps and state senators to make sure they understand the impact on the local economy and local government when Springfield tries to burden shift their financial responsibilities down to the local level.
All right, thank you.
All right. Are there any other questions for Mr. Rickard? All right, seeing none, I appreciate all the information you provided us, Mr. Rickard, on the financials piece. So we'll move on to our next item.
Thank you.
Thank you very much. Which is I need a motion to go into closed session for pending litigation and some other, pending litigation. Can I get a motion and a second, please?
Mr. Delgado, sorry to interrupt, but I think you also have to make it clear that it's also to discuss labor negotiations.
Thank you. So I move to go into closed session for pending litigation and contract negotiations. Can I get a motion and a second, please?
Second.
Motion by Mr. Arena, second by Batista, and Mr. Schultz, second as well. Roll call, Mr. Batista.
Yes.
Mr. Arena.
Yes.
Crosby.
Yes.
Ms. Crosby. Thank you. Mr. Hoffman.
Yes.
Mr. McDonald.
Yes.
And Mr. Schultz.
Yes.
And I'm a yes. So